Hey, what's going on, everyone? Welcome back to Let It Grow Investing. Thank you, as always, for being here. I'm Jeff, and we're going to talk a little bit about what's going on in the finance world, what's going on out there, and how we can make some money in this crazy, crazy market. Yeah, man, busy Sunday for me here. Getting one truck off the road, selling it, trading it, getting plow equipment off of that, which I know this is kind of a weird mix, but plow snow in the winter and do a lot of landscape, hardscape, and stuff in the spring and summer months. Yeah, weird mix, but I think finance is definitely a big passion of mine. So kind of mix the two, kind of gets me away from that landscape life for a little bit, gives me a little bit of time to look at my personal finances and maybe help you get on that path to your own, financial freedom, if you will. Yeah, I've got that going on. So it's a little bit later than what I normally record, but let's go ahead and dive right in. A lot of different things going on out there. Absolutely, trounced on the day on Friday as far as what the market was giving us. And, I am going to try this picture in picture thing again. We are going to allow on every visit. Let's just see what's going on out there. So let's see if I can go ahead and share my screen. I will get everything brought up to speed for you guys. We are going to be looking at E-Trade. I will go ahead and share that. First up was Apple. I was just trying to keep track of what they're doing. They did announce that they are trying to completely get out of the Qualcomm modems in all iPhones within the end of the year, I think it was. Qualcomm, man, I hope they can pull through. I know they had talked a lot about things that they were trying to do to not be so reliant on Apple going forward. Apple really did have a decent day. And I did want to point out that a lot of tech stocks did not. A lot of the growth stocks have really been getting pummeled. A lot of investors looking for dividend plays right now. So a lot, I really don't like talking political things here, but I do think that political plays into how our money and how the markets cooperate. So I think we have to, kind of dabble in that here and there. A lot of the things going on in government with tariffs, with, this is being investigated, that's being happening, are really affecting a lot of the stocks right now. So, Apple tends to be one of the ones that isn't really a dividend stock, doesn't really necessarily always act like a growth stock, but it's definitely a blue chip name that I think most people have some exposure to. So, you have 0.4% of a dividend here, and one that is just a mega cap. But not all mega caps, not all the Mag 7 really are participating in the market the same way lately. So on the 1 month, Apple has moved up nicely. I think I sold some around 230, trimmed a little bit. I don't really trade this one, but it was just one that was getting a little bit too large for me. And some of the numbers as far as the growth going forward, the price to sales, and some of the metrics that we follow, the PEG ratios, were a little bit stretched. That's not to say that people don't run back to Apple when there's any fear out there. It definitely is where a lot of people park a lot of money to weather the storm. So we're seeing that, right? We're seeing, things like DGROW. We'll take a look at that one. The core dividend growth ETF, fairly even on Friday, right? I say that. The Dow was down. You can see it at the top up here. Let me see if I can scroll up any bit more. Let me get this other piece off my. I can't even get that off. Anyhow, so yeah, we're down 748 on the Dow, 1.7%, 2.2% on the Nasdaq, and 1.7% on the S&P. So when you look at the core dividend growth ETF or the iShares core dividend growth ETF, you're only down 0.75%. It actually looks a lot better in comparison to what the rest of the market did. Similar for Noble, that's going to be your dividend aristocrats when we're looking at Noble. And aristocrats have been paying out raising dividends for more than 25 years. So this one was down only, about 0.1% on Friday. A little bit more down after hours on Friday. But, so what are we looking at when it comes to a portfolio? That is dividend aristocrats. Looking at the portfolio here, let me move this other thing out of the way. A lot of large cap names, some mid cap, some small but more of the medium to large cap companies, right? A little bit of giant, a little bit of small. We're looking at, I'm sorry, I've got this other pop up here so I can see myself. Emerson Electric, Walmart, IBM, Cardinal Health, Dover, Franklin, Abbott, Roper, S&P Global. So yeah, a lot of those names that are going to be paying those rising dividends. That's really what this portfolio is about. Good place to park some money as well. And a lot of people leaning on these right now for the fact that you're getting dividends, you're hiding from some of the fears. A lot of these companies are going to be exclusive America, U.S. companies, not really affected by the tariffs so much. Walmart does not qualify for that. I'm not saying that they do. They are definitely affected by the tariffs, but some of these are not going to be as much affected by tariffs. If you're looking at like insurance companies, a lot of banking companies, ADP, that is going to be more in payroll for a lot of businesses throughout the U.S. at least affected there. So then if we actually take a look at something like, who's going to have a lot of growth stocks, that could be ARK Invest, right? The ARK K fund, they were down 6% on Friday, right? So the growth stocks have definitely taken the brunt of this hit with not knowing what tariffs are going to do, not knowing what is going to happen in the government. So we're looking at Tesla, Roku, Coinbase, which actually did fairly well. I think they had an SEC win over at Coinbase. We can check on that one in a minute. Palantir, they sold off a lot this week, but I don't know. I still think that they could go down a little bit more. Ultimately, I think that if they got down to like 85, I'm interested. I'm not interested in buying more north of 100. I've talked about that one time and time again. I don't really need to get into that one anymore. But, CRISPR, Shopify, Block, they're going to suffer more losses as inflation has been stickier. We're probably not getting the rate cuts that we had anticipated. So rates stay higher for longer. It's going to affect these growth stocks more so as they need to borrow money. We saw that with DraftKings this week as well, actually on Friday. Let's pull up DKNG. Let me get this out of the way yet again. And we will look over here at DKNG. Well, DraftKings had a super quarter, right? They did great. We were talking about this one. You guys can see the chart here. This is when they announced that they had a great quarter. We spiked all the way up to 53.49. That was on the 14th, or 53.61 if you look at the 52-week highs that's over here. And then they raised debt. So they issued a $500 million debt raise. We see it over here, this article. So that affects, equity shareholders negatively, right? If they go bankrupt, they got to pay the people they're in debt to more so than they have to worry about the equity holders, us stock investors. So that is going to affect us, right? The fact that they have to raise more capital at higher interest rates is going to put pressure on the stock to sell off. It did exactly that. We would have thought that it would have done that. JP Morgan is still saying buy on the 18th. So what did they say? JP Morgan, they raised to 61 from 53. So they're still bullish. JMP Securities also bullish. They are at market outperform. We've also got Wells Fargo at overweight, and that was on the 18th as well. So still some people saying, hey, you can buy this thing. They're raising capital, but they have the growth story to really support that cash raise. It's not necessarily we're starving, we need a lifeboat, I need to raise capital, but it seems more like things are going really well. And if we want to grow faster, we need to raise capital. So they sold off on the news, but it could be a sign for you to maybe dabble into this one. So yeah, that definitely could be a reason for you to get into a name like DraftKings right here. We've got United Health, UNH. Big drop for UNH, man. This is also one that I don't know that it's quite the time to go ahead and buy. I think there's too much going on here to really know. The Department of Justice investigates Medicare billing. This is why this one is going down. Man, I think I told you guys probably that I was buying this one in the 460 range or 450 or whatever I don't even really recall when this one was. Let's see if I can pull up a chart here. This is the 6 month. Actually, it's probably before that. I might have been buying it right here, like 480, and had it run up to 550. And, now it's back down to 468. So, do I like the price? Yeah, I do. I'm looking back here. Where was this? This was, I can't see the actual date, but it looks like about a year ago that we were at 445. So we could maybe see a bit of support here at that level, but if we break that, I don't know how far we have to go down. It looks like we've touched this 450 line 3 times. It didn't really want to break it. We have some support at this 450 level, so it could be something that you could potentially start adding to here. Really just depends on your tolerance and how far you think this Doge Department of Government Efficiency really goes into investigating. What do they shut down? How hard is UNH hit from this? Are they overcharging Medicare patients? Or what happens, right? Do they just really crack down on what Medicare can spend? That could be another thing, right? Does Medicare kind of tighten the screws and come, back to UNH and look like we're going to play hardball? Is it going to be a case where they're just not going to pay them as much and these numbers are all skewed for the next 5, 10, 15 years or whatever it might be? There's a lot of unknowns. So I'm not saying that it is a great price and there's no fears. There's definitely some fear out there. Sometimes that's a time where you want to hold your breath and dive in. Other times we really don't know. So I could potentially see myself adding here. I don't know that it's for everyone, right? So you got to make your own call. You got to do your own homework on this one. I will probably add a couple shares at some point here. With that being said, we also had CrowdStrike selling off a bit. They weren't down as much, but this was on the fact that the IRS or the CrowdStrike is not able to sell as much to the IRS right now as they are cracking down on the spending over there. So down 6.75%. So yeah, this is one, I think I told you guys before I got out of this when, the everything hit the fan, if you will, with flights being grounded and all the internet basically going out for those, 12 hours or whatever it was. And then it dropped to 220. I probably should have bought back in at that point and then been there for the double up. I did not. Hopefully some of you guys took that as a sign to buy and, you had that nice run up, but I did not. So now with some more fear, uncertainty, and doubt, the FUD that is out there, CrowdStrike comes back down to earth. We're seeing the growth stocks really get punished from a lot of these headlines that are out there. So that is something to really take into consideration before you are just buying based on the fact that CrowdStrike is on sale, right? It's down 7%. It's got to be a buy. Not necessarily, right? We don't know where this thing ends up. We've seen it before, maybe not in the same capacity of what is going on with the DOJ and everything right now, but we've seen these stocks come down. We've seen them rally. I don't want anyone to get hurt out there. So I'm not advocating go out and spend all your money on CrowdStrike because it went down 7%. Do your own homework. I'm not a financial advisor, just simply a guy that is a little bit more in tune with this and tries to pay attention to what the market is doing. Same time, what other ones are we out there? We just looked at Cardinal Health. What are they doing? Down minimally compared to what UNH was doing. What is it Molina? MOH. Let's take a look there. What are they doing? Not as bad as UNH, but down as well. Eli Lilly. Let's take a look there. We've got Eli Lilly. This one I was saying to buy at 730. I thought it was too cheap. Really not so affected by tariff talks, not so affected by what they're doing with Medicare. So it is performing pretty well right now. I'm comfortable with this one. I still don't know that it is a screaming buy for me. I'm going to shoot to say that the analyst research on this thing still points up. It does. It is on one of the 12 stocks that we're looking to buy this year. So is CrowdStrike. So we've got some decisions to make, and I haven't made that decision yet. Normally, you guys think that I probably have it all picked out, but quick recap: we're buying NVIDIA, Tesla, Meta, Amazon, Eli Lilly, NextEra Energy, CrowdStrike, Costco, Bank of America, and AMD this year. Bitcoin is a appetizer, if you will. If we can get some Bitcoin into the portfolio, we're going to add that somewhere. So Tesla, man, Tesla is down, but yeah, down more. Oof. More growth pains there for Tesla. I don't know that I want to go ahead and buy that one anymore. Not that I don't want to buy it anymore, but I'm going to give that a pause here. I think Eli Lilly makes a lot of sense. I kind of like some defense names, but those are not on the list. So maybe we look at an Eli Lilly, or maybe we look at a CrowdStrike. I haven't added that one in a minute. I think that and like I just said, oh, sorry, sore neck. We've got a little bit of upside there. I don't know. That's a tough one. Bank of America could be a contender as well, as a lot of the bank stocks have been holding up really well through a lot of this market uncertainty. As rates have stayed higher, right? We're seeing rates stay higher for longer, which eventually helps banks. Maybe not when rates go up to 7% right off the jump. There's a lot of fear, but then people get used to the fact that rates are at 6%, right? So we're seeing more market demand as rates kind of came back down. People don't think that we're going to go to 5% this year. So maybe we start to see more borrowing at 6% because there's all this pent up demand for home buying or for a new car or whatever it might be that you need. Even if it's a line of credit, you want to rehab your house or you want to do whatever, you're still borrowing at that higher rate. So those banks are making more money on your money, and now there's more demand for it. So Bank of America actually makes a lot of sense right here. There's 18.3% of upside. I could, I don't really like to listen to the analysts solely, but we could take a look. Let's pull up the Refinitiv report. Let's see what they're doing here. I will share this one instead. We are in buy territory. We got a nice, comfortable dividend, trailing PE of a 14, forward PE of a 12. That makes sense, right? It's not too stretched there. I know that banks trade lower on the PE metrics than other companies. Just historically, that's just how they trade. So we've got 4 upgrades. We've got 2 downgrades over the last 120 days, 14% of upside there. But let's take a look at where they are on growth. 6% by the end of 25 and 13% by the end of 26 on revenue. Earnings per share going up nicely. Maybe a little bit of a slowdown or flattening here in Q1 for earnings. But hopefully by Q2, we start to move back up, right? So that's nice to see. What do we got on the metrics down here where we really want to pay attention? Dividend grower. They're paying more, right? We like that. I'm getting paid 8% more than I was last quarter or last year to hold on to this one. I'm good with that. Dividend payout is very comfortable at 31%. Normally, depends on the company. Some are under 60% dividend payout ratio. Others, your REITs, they're going to be paying more. Other cash cows, think Altria, they're going to be paying way more, in the 90% range. And, a lot of people just buying that for the 7 or 8% dividend yield. UPS, they did raise their dividend, but I know their dividend payout is really high right now. So that is one that we were talking about, a little bit concerning, but UPS did raise. So did O Realty. I know we watched that one a lot as well. Forward PE, 3% premium. But like I said, people are willing to pay a little bit more for dividend names right now. So it kind of goes with the theme of the market. You're still getting a solid company at a 12 times forward based against that 11.95 year average. So we've got that. Price to sales, a little bit rich compared to average, but nothing like a Palantir, nothing like a 30 times or 31 times on NVIDIA. I think Palantir was like 100. I forget what that exact number was. Forward peg ratio, that is actually comfortable, right? I like that. A 1.1. S&P 500 index average is a 2.1. So, you know what? I think we're going to add some BAC this week. I think that is a safe bet. I think it's probably a good time to get some financials back into the portfolio. So I will be adding $200 worth of my own money into our Webull account, which we started way back in 2022. We had a rocky year that year. How are we doing on that account? Let me go ahead and pull that up on my phone. Sorry, guys. I know that's probably less enticing for people watching the video that I'm just looking it up on the phone. But let's do a quick recap. We are net account value 38,455.72. We are up 24%. And we have made $7,391 simply by buying a different stock every Monday, $200 worth into the portfolio. So, is it setting the world on fire? No, but we're making money, right? And we're learning at the same time. So, I'm happy that we've done this. If you need help getting started, there is a link in the description for Webull where you can do some fractional share investing. Follow along with the portfolio if you want, or make your own choices and just, kind of let it grow. Put your own money in every week, let it grow. Kind of the theme, kind of how it got started. So yeah, I'm buying Bank of America. I think that's where we're gonna, give the nod this week, and we're gonna go from there. We got what else we got? Oh, a lot of people talking about Warren Buffett, right? We're looking at Burke B. I think they have $272 billion invested in equities, but let's see what they have when it comes to how much cash they have on the sidelines, right? That is the big worry right now. Berkshire Hathaway, spelled it wrong, cash. Let's take a look here. Let's see if I can go ahead and share this one. We are going to share screen on Warren Buffett. Let's take a look. Sorry, not the CNBC Club. We don't want that. Warren Buffett amasses more cash and sells more stock, but doesn't explain why an annual letter. He sold more stocks in the latest quarter and grew a record cash pile even larger to $334 billion, but failed to explain why. I mean, I can't necessarily make that call for him. I'm not going to try to put words in his mouth as to what he's doing or why, but there's definitely a lot of concern as to we're not invested in so much in stocks anymore. We are, a smaller percentages into stocks. And I saw another article here that I wanted to get back to as to what was going on with it and what was said. Let me see if I can't find that. No, that's not there. Where was it? Warren Buffett paid a total of $26.8 billion to the IRS. That was one. Berkshire cash hit a new all-time high. Berkshire now have $334 billion of cash as of the end of 2024, up from $325 billion as the end of Q3. So we're raising more cash. Warren Buffett was just said this about Berkshire cash position. Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great majority of your money remains in equities. That preference won't change. While our ownership in marketable equities moved downward last year from $354 billion to $272 billion, I got my numbers wrong. The value of our non-quoted controlled equities increased somewhat and remains far greater than the value of the marketable portfolio. So, right, I'm just trying to recap this in my own mind. $272 billion in equities, $334 billion in cash, right? So there is more in cash, right? Am I reading that correct? Sounds like it to me. So, I don't really know what you do with that war chest. I don't know where he's got that cash parked. I'm sure it makes money where it's parked. There's no doubt about that. He's obviously smart enough to do that. But why are we, amassing just so much cash, and what are we looking to buy? I'm not 100% certain if he thinks that there's going to be a downturn or, things are too high, if the market, the S&P value or the PEs are just too rich. He's very much a conservative, investor that doesn't simply just buy because everyone else is buying. He buys and then everyone else follows. So he's definitely, building this cash position for some reason. I got to imagine it's something to do with valuations, because that tends to be a lot of the reason why he is out of a position or buying into it. So yeah, we'll see what happens over at Berkshire. We're going to pay attention real close to what's happening here in the market. Right, Berkshire had sold more than 134 billion worth of stocks in 2024. This is mainly due to the shrinking of Berkshire's two largest equity holdings, Apple and Bank of America. Well, we're going to buy one of them. We'll buy the ones that he's selling. And granted, I'm aware that he probably bought Bank of America at 9 or whatever during the financial crisis, and we're paying 40 something for it. But hey, we got to start somewhere. So appears Buffett is not finding his own stock attractive either. He's not buying back his own. He's not buying Berk B or Berk A. No shares in the fourth quarter or in the first quarter through Feb 10. Okay. All right. Well, yeah, we got to take that with a grain of salt. We got to do our own thing. I don't want to have all of our cash deployed. We want to keep some on the sidelines. Unfortunately, I'm not in that position right now. I have moved a lot of cash back into stocks. I have moved some of my cash from my brokerage into my IRA so I can fund that thing for 2025. So a lot of different plays I'm making as well. I know we were going to look at Coinbase, right? We were going to do that. Well, I did say that. Let's go back over here. Let's look at what Coin is saying. They had the SEC. Oh man, they got beat up on Friday too, but that makes sense. But hold on, news. Still looking like there's some upside there. Bitcoin is just getting started. ARK's Kathy Wood says why she thinks the crypto is about to be unleashed. Yeah, I don't know. Kathy's been right a couple times, but I think a lot of people are falling out of love with what she's doing. We don't want it to continue straight up. Okay, I get that. The crypto's price could reach 1.5 million. I'd love it, but I mean, I don't know how soon that's going to happen. All right, but what do we got here? Coinbase stock falls. The SEC is giving up its case against the crypto exchange. Coinbase shares were dropping early Friday after the cryptocurrency exchange said the SEC was ready to drop its lawsuit against the company. You would think that would be a good thing, right? Coinbase said Friday that enforcers at the SEC will recommend a dismissal of a 2-year-old lawsuit which sought to regulate the company as a stock exchange. SEC staff have agreed to dismiss their case against us, the company said in a post on X. Coinbase shares were dropping 0.8% in early trading after gaining more than 4% in the pre-market. Okay, so they gained pre-market. They were down a little bit to start the day. Did they just get pummeled on the fact that the rest of the market was going down? Was it just that bad of a session for everyone? It almost seems like that would be a reason to buy this thing. Coinbase is maintained at neutral. Okay, this is the same day. The stock rises, but then it's down 8% on the day. So this had to be an early thing, right? This was an early thing, 8:39 a.m., but by the end of the day, we were down 8%. So I don't know. That, man, it kind of makes you scratch your head. Like, what is this going to happen here? Do we want to get in on that one? I'd rather earn or own the coins rather than own the stock, but it could be a good turnaround play as well. So yeah, we've got that. I talked about Apple. We talked about the Qualcomm modems. We did not check in on Qualcomm. Qualcomm is down. I kind of figured that, right? If they are getting announced from Apple that they are not doing any business there, Qualcomm's had its own rough patch. I got out of this thing. I sold a covered call on this one. I'm kind of happy that I did. I don't know where this thing heads, right? I can't think it gets to 250. I just can't. If Apple's completely getting away from them, they have other lines of business. Don't get me wrong. I know they've been focusing on building those out and kind of doing their own thing. I don't see how this thing gets to a 250 handle by the end of 12 months. I just don't see it. So someone does. If it happens, great. Great for them. I could see 185. I could see that, maybe 200. I do not see 240. I don't know. I'm going to go ahead and pull up Refinitiv if it's here. It is. There we go. Let's take a look. If the earnings are going to be crazy, maybe it makes sense, but where are we at? 2 downgrades, about 15% of upside there. Let's take a look at earnings. Earnings is coming way down from 341 to 287 or 280 in Q1, and then down for Q2 again to 265. Earnings by the end of the year slated to go up pretty much in a straight line if things go perfect. If things don't go perfect, we're going to kind of flatline and potentially drop. I don't know. That Apple news could bring them down to mean or below that. I don't see it, guys. I really don't. I'd like to say that they're going to have a great earnings report. I mean, if they can get 11% of growth on revenues, if it makes it to the bottom line and makes it to earnings, maybe 16.8% by the end of 26. I'd like to see it. I really would. I don't know. I don't have that high of expectations here. Dividends look fine. Dividend payouts looks fine. Dividend yield is average-ish. We got discount on forward, only 3%. And I'm guessing that PEG ratio is probably a little high. I'm going to shoot to say that. Yeah, 1.9 versus a 1.2. Below the S&P, but, almost 50% more than, or more than 50% more than where they normally trade on a PEG ratio. Price to sales right in line. I don't know that you're going to get the growth right now. So yes, it makes sense that the forward PE is lower, but you're not getting the growth out of it. So just the fact that your numbers here are low doesn't necessarily mean it's a buy if these aren't going to keep up with the lower price here. So I don't know. It's not one that I'm really itching to get into. I'd rather put my money a lot of different places. Hence why I got out of this one. But man, if they can turn it around, maybe when we're looking at these numbers trending lower in the June quarter, maybe that's when we buy. Maybe if they hit 265 and this thing does drop on this, what's potentially going to be bad news, maybe that's when this thing does bounce lower. And, that could be a point to enter. I don't know. Just speculation, just kind of thinking out loud here, but just my 2 cents. So that's what I'm seeing there. Rivian. I did want to look at Rivian real quick. They closed the deal with Volkswagen. So I'm just doing a quick recap of everything this week, really. They closed the deal. Where was it? Let's take a look at news here. They sold NVIDIA. They bought Rivian. I bought a little bit of Supermicro this week. Not much, but I bought a little bit, right? So we've got, California public employees. Where are we at here? Tesla falls. Rivian are in the news. Rivian in reverse after disappointing fiscal year 25 deliveries. We did see lower EV delivery numbers, which in the next argument says strong 4Q balances out mild outlook. Okay, we got EV deliveries, right? I know there's something going on with the Volkswagen deal. I got to find that thing for you guys. Let me see if I can find another article here on Google about the Rivian Volkswagen deal. And see if we can't get anything here. What do we got? It's a $5.8 billion joint venture in November of 24 called Rivian and VW Group Technology will be an independent company. They're investing up to $5.8 billion. I think this is done, right? Rivian and Volkswagen Group announced the launch. That was in November. That's old. We got, come on, why are all these from 24? Give me some new news. We need something here. These are all old, guys. I'm sure there's a way to do this, but I don't know exactly how to do what I'm trying to do and see if I can search for something recent. Give me some news. Even on the news. Nope, that's just earnings. That's old. All right, I don't know. I'm going to have to find it somewhere else for you guys. Anyhow, I think the deal's done. I'm curious to see what happens there. We will see what happens with Rivian. We're still happy with ours. That being said, we got that, and now I think I told you guys I'm getting the one truck ready to sell, and I'm buying another diesel. So we're gonna have a gas, a diesel, and an EV all in one house. So we're probably not the norm. We are not the norm on that regards. But got Disney. man, Disney and the MLB, or Disney and ESPN, are actually parting ways. So we will see what happens there, man. ESPN has been just a rough spot for Disney for quite some time. I'm still in this one. I had some covered calls on it. They did not sell. And quite frankly, I probably would have been better off if they did, because I had it at like 114 or 115, and I just missed it. But now we're down a little bit. But nonetheless, I'll probably write some more covered calls on Disney. I think I told you guys I wrote some on NVIDIA and Palantir. I wrote the Palantir ones at a great time because they were peaking out, and I wrote the covered call. And then we had Alex Karp selling. I'll give over to Palantir. I'll make it make sense, guys. I swear. We got Palantir, right? We got Alex Karp was selling what, 1.2 billion worth of Palantir stock, I think is what the number was. I know we've got that's got to be here this week. Palantir stock rises, 2-day slump. It's probably too far back. It's got to be here though. Yep, Alex Karp's new plan to sell 1.2 billion, right? So this is one of the things that really sold this thing off. Trading at 190 times future earnings, man, it is so expensive. It is just incredibly expensive. An underperform rating, all right. You've got to understand that this thing has gone up so massively, it cannot continue to do this, right? So I told you at 75, I was a little bit nervous. I told you at 100, I was nervous. I told you at 120, I was nervous, and I said I wouldn't buy it. Well, look, I mean, maybe if it comes down another 15%, I'm going to buy, right? I told you in the 80s, I might start to pull the trigger now. 70, yes, I said no, but at the same time, we didn't have the earnings come out that said, yes, we put up more than 40% revenue growth. So now we got a little bit more to go on. I still don't think it's worth 120. I don't know that it's necessarily worth 85, but I think there's enough momentum behind this thing that it might not matter, and it might still run up. So the fact that my cost basis is like 17, I could probably afford to put some in at 85 if it gets there. But I think the covered call that I wrote was at like 138 or something like that. So if it got up there, I'm trimming it, and I'll try to play the swings of it here. So that's what I'm looking at. I think we're still looking at other names, right? I kind of started dabbling in another AI name. That was Big Bear AI, and yes, down big on Friday. I think I added some more on Friday. I am starting to buy a little bit of this one. A lot of people pointing to the fact that this is going to be a leader technology for AI for defense, national security. So when you look at who is really backing this and who is owning this thing, you really start to think that this thing can't fail. That's not to say that anything can't fail, but it looks promising as a $6 stock that it could really move up higher. So there's been a lot of momentum behind this for the fact of who their customers are, but also the fact that it's AI. I don't want it to be a .com bust or bubble. You're buying into all these AI names simply because they say AI, and then everything kind of comes crumbling down, right? So I don't want to simply just push into all these growth stocks right now. That's not my point. But I do think that some of them do make sense and some can be purchased, right? So take a look, see if anything of these names maybe make sense for you, and let me know what you guys think. I think that's probably about it. I think that's all that I got for us right now. We talked Apple and Qualcomm. We talked Coinbase, CrowdStrike, United Health, DraftKings, Rivian, Disney. I'm just looking over my notes. We covered a lot. So I think that's about all the time that I got for you guys today. I think that's about all the news that I can fit in. We were right around 40 minutes, so I think that's pretty solid, right? So yeah, thank you guys for stopping by. Please make sure you like, subscribe, and share, and I will see you guys next time. Take care.